Lastly, we have the Australian interest rate statement here, where they are expected to cut rates by 0.5%. Now, looking at the analyst estimates, it's actually showing for more of a larger cut than what's shown here. This is 3.75, but looking at it on my Bloomberg, I see that actually the median estimate is for a 1% cut, down to 3.25. Seems these estimates have been ratcheted down due to recent commentary and developments. So the real consensus is somewhere between 3.25 and 3.5. So I'm going to say if it comes out as either of those, 3.25 or 3.5, I think that that's really a non-event, no real edge there, other than the central bank is being nice and responsive and things are coming out as expected. If it comes out at 3.75% or higher, that means they cut by less than expected, and you may see an initial rally on the Aussie dollar, but it should turn into a sell-off because central banks being less responsive, and that's probably going to prompt some negative Aussie dollar sentiment ultimately. So I would look to sell if it comes out at 3.75 or higher. Look to sell a rally and get in short on the Aussie dollar, hopefully at a higher price than pre-release. If they cut rates by more than expected to 3.0 or lower, that should cause a nice short-term sell-off in the Aussie dollar. You can take advantage of that with a sell, looking for 40 to 50 pips. But you may look to, if you miss out on that, or if you're in on it and you've got some good profit, look for an opportunity to reverse that trade and get in on a buy on the dip. Because if the central bank is willing to be that aggressive with rate cuts, that's a good sign, relatively, for the Aussie economy. And you should be able to catch a reversal trade as people are encouraged by such a move from the Royal Bank of Australia. Alright guys, that's going to do it as far as the news is concerned. Taking a quick look at the euro dollar, we've definitely come down through support. Like I said in Friday's video, that unfortunately didn't make it onto Forex Peace Army, but did get onto my web space and out to all the Diamonds people. Breaking down here is really giving us a picture where we're not only going to break the lows, which we ended up doing over the weekend, but we're going down to test the daily chart lows and head to new lows. We're going to be down to 124 and well below, probably before we see a major 500 pip bounce. So maintaining your short position trades that I've been mentioning, getting short on rallies. I really wanted to get short at 135, but instead it ended up kind of double topping here, and that was the best we got. So didn't get a chance to heavily reload, but I still have plenty short. And the next place I'm looking to take profits is somewhere in the 124 range, in case we find some support for a while. If we do find some support down here and get a nice rally up back to the 128 or 129 level, that would be another good spot to get in short. But we're going to need to sell off first, and then bounce in order to get me to add to it, because I want to take that profit first so I can have a little more spare leverage to reload with. All right, guys, that's the situation on the euro dollar. Expect continued downside in the aftermath of the the Fed announcing they're going to be buying and supporting treasuries, in the wake of just the increasing realization of how bad the financial and equity markets and just the picture for everything is. Realistically, everything's a lot worse than the mainstream and even the financial media really portrays it to be. And every day more and more people are kind of becoming aware of what's really going on, and this should snowball into in the stock market, and perhaps even a further sell-off in commodities, and most likely a further strengthening of the euro dollar on a similar order of magnitude to what we saw here. So simple extension it was sell off from about 1.6 down to about 1.23. That's about 3,700 pips. We look at this as the high, 1.47, selling off at least another 3,700 pips. It's going to take us down to 1.1, folks. That's really the most likely scenario. I think it's probably going to go further, maybe down more towards the 1 range, because just basic Elliott wave theory, if you consider this wave 1, this wave 2, wave 3 is never the smallest wave, so it's got to be at least 3,700 pips to the downside. That's what really makes me pick my target after we really break the lows. My next target is around 1.1 because it should go at least that far, and my final target is around parity because that's probably going to be a very magnetic value for the euro. We've got to be careful though. Keep in mind, guys, these kinds of huge moves and volatility, while great for trading, are very very concerning for just the fiat currency and free floating exchange currency system as a whole. These kinds of moves are gonna prompt calls for reform and a completely new financial system, and we may lose free floating currencies. If that happens, we're not going to be able to trade currencies. This very well could happen at some point over the course of the next 1 to 2 years, especially if these forecasts come true and we're looking at parity in the euro going from 1.6 to 1. Having a free floating currency exchange is supposed to provide a stable market reflecting fundamentals, and it's not doing that right now. The market is not doing its job, and so they may get rid of it. You know what I mean? If then we've got to be prepared to trade something else, trade stocks, trade futures, trade the DAX, trade. There's other things to trade out there, and I've experienced doing it. So even if the currency trading world comes to an end, there's still plenty of ways to make money out there, and I'm going to be all over it. Stocks, we're going to see probably 6,000 on the Dow this year, somewhere in the 6,000s. We'll probably see 600 first on the S&P, and we're on our way down to it right now. I think just like the euro is probably heading to its lows, going to test them and going to break them significantly. I see the exact same kind of price action with the stock market in the future. So keep that in the not too distant future. So keep that in mind. Look to take advantage of it any way you can. And if for some reason they get rid of currency trading, which I could definitely see happening, then we'll look to other markets to continue to make our money. All right, guys, take care. I'll speak to you folks